This is your daily review for Thursday, July 17th. Let's go to this little calendar icon here. We're going to go to Thursday, July 17th at 9:30 in the morning. Let me just size it a little better so you can see. Okay, this is NQ 1 minute candles. One of the main things we're going to focus on is this yellow moving average, and that's the EMA 21, which is right here. It's something I look at a lot. Okay, this rectangle here is from the Lux Algo Sessions indicator. It shows the start of the New York session and the low here at the New York session, and that's the highway up there. If you like to wake up early and trade pre-market, those are some excellent runs here. This video is going to be in two parts. There's the easy part that we're going to talk about at the beginning, and then there's the more challenging part, which is scalping the range. That's we'll talk about after, but first we're going to talk about trading the trend. So let's take a quick look, and let's pretend that we wake up early and we want to do some pre-market trading. So what do we have here? We see price go above the EMA 21 and then pull back to it. In fact, it pulls back a couple of times. So let's say we would have got in, well, here, maybe here. Let's say we got in here. So you could have got an easy, quick 50 points right there. So would I have just locked on that 50, or would I have waited to watch the price change? I would have waited. I would wait for the trend to change. So I could have got 50 points if I waited. Yeah, who knows? It could have been more. If I had perfect timing, I could have got 60 points. But I would have got it here when I see these candles change to this bright red from the Wada Antar explosion oscillator. And then price goes below the EMA 21. Now I like it when the price goes up and then pulls back, so I can get a good entry, a discounted entry. Here it doesn't pull back. So if you wait for a pullback, you don't get anything. But if you're brave and don't wait for a pullback, you see this strong color, you could have got 50 points like that. So yeah, Nebula gives us this plus here, saying it's a good time to add to your short if you didn't already open the short when you saw this sell entry here. But I don't trade that early. I don't like to trade the open because it's too choppy like that. However, it starts to get a good trend here. So let's take a quick look at this nice trend, some trends here. So price goes up, we get some strong buy color here, buy volume here. Let's say we get in right here. You could have locked on 50 points of gain there. If you can hold, where would I be getting out? I'd be getting out when I see it break below this candle right here. So I'd be getting out right there, which I would have lost 9 or 10 points. It's 41 points instead of 50. But who knows? It could have went higher. And then when I see that sell volume increasing, that bright red color there, I'd be going short. And I love it when it pulls back to the EMA 21, which is right here. So let's switch this to 10, well, let's say 50. We couldn't have got 50, but we could have got 40. But where would I have gotten out? Because I wouldn't have just locked it in. I would have looked for, when I see price, the sell start weakening, and I see price make a new high over these candles here, I'd be getting out right there. So I'd be getting 24 points. I could have did better, of course, if I got it here, but I don't have perfect timing, and maybe it would have went down even farther. Who knows? Now this is a nice trend. Let's go 50 here. Where do we get in? Well, we see price making new highs here, breaks above the EMA 21. So this is an excellent place to get in. It even pulls back a bit. Let's say we get in right there. So if you had 50 points take profit set, then there's your 50 points. But you could have did better. And in fact, this is one of the things I want to talk about is, like I said before in previous videos, strap in and hang on. Because this makes the trading easy. So we see price staying above that EMA 21. And now it pulls back to it here. It even crosses a little bit, but then notice it only crosses for a moment before it comes back up, and it keeps crossing it here. So this is consolidation. Now, I don't blame you for getting out here when you see this red color here, coming back to the EMA 21, and if you did that, you would have gotten, you know, something like 70 points, 72, something like that. But look at all this safe space you have. We could move our stop loss up somewhere, like, let's say we move a stop loss up right there. I'll put this horizontal line. This is your margin of safety where you're not going to lose money on this trade. Of course, you want to make as much money as you can, but you're not going to lose. You don't want to. You don't want to get back down here. So we'll move our stop loss up to here, and then we'll just hang on. And your price starts going up above the EMA 21 again, which is looking great. And let's shrink this a little bit so we can see a little bit more. And now this is where it gets into consolidation, and it stays here for a long time. In fact, I'm going to give you a little preview. It stays here for the rest of the day, really. Here it comes down, makes a new low. Actually, it's more like matches the low from this one here. But basically it consolidates for the whole day. And this is tough to trade. We're going to talk about how to trade that. We're going to talk about scalping the range in just a moment. But instead, what we could do is just hang on to this trade. This was a great entry. So instead of closing that long, we're just watching it. Watching the price action. And we're just having some coffee. Maybe we're eating some Doritos, and we're watching price go up and down. We're watching our profits go up and down, but we're, you know, even at the low here, we're still at basically 100 points of gain. But we're not worried about losing money on this trade. It's just a question of how much money we're going to make. So we can just watch, and instead of trying to scalp the range, we're just deciding when we're going to get up. So we're going to make a good high here. Not a new high like this, but good high, and down, another new high here. We're getting near the end of the day, so I'd be wanting to get out somewhere around here. It makes an even higher high here. Let's say we get out something like that. It's around 116 points, which is an excellent trade. If we'd have made 50 points here, 20 points here, 50 points here, that's an amazing day and easy. But instead, let's talk about the other option. Let's say that you didn't get up so early and you missed all those good trends early in the day. We're going to remove these drawings, and let's say you start late like I usually do. Zoom in to make this easier to see. So what I want to do is I want to talk about scalping the range. So there's no range here. Price is trending nicely, but we're always looking out for when price starts consolidating. So here we see price make a high. So this could be, I'm going to press Option H on my Mac, which is horizontal line. I'm going to put one right here. And is that going to be the top of a range? We don't know. Maybe it's going to go higher. We don't know. But we see price come down here and then move up. So this could be the bottom of a range. And in fact, it is briefly. So if we think this could be the top, and here's the bottom, it comes back down to the bottom, do we just open long as soon as we see what could be the bottom? Well, in this case, it works nicely. But we don't know for sure. It could be going lower. So what I like to do is wait to see price look like it's starting to move higher. So I'm going to do along here. Let's say this is 217 up to 241. So that's that was a mistake there. So it's about 25 points. Let's do this again. Okay, where would I get in? When I see price start making a new high, so you can see the top of that wick, price goes to above that top of that wick, so something like that. What I like about this is my stop loss is just below the bottom of the range. Is it possible the price is going to come down or something? Well, certainly it will, but we have some evidence that there's support at this level. So I like to think that I'm minimizing my risk because we didn't see price go below that, and it looks like it's starting to move up, and in fact it does. And we got 20 points again right there. So, and we could have even hung on to it. We don't have to get out at 20 points or even the top of the range. In this case, the top of the range fails. Hits it, pulls back a bit, and then breaks it above. And you could just hang on to this until wherever you want. You could have got 40 points there, or you could, and then when you see price come down through the EMA 21, I'd be looking to get out here because price could be coming back. We had a lot of gains, and maybe market's gonna turn around. It doesn't. It comes back down, and I'm going to move this out of the way for a sec. Just close that a little bit. So let's take a look at the price action again. So we see price couldn't get down below that, so that could be a new bottom of the range. And then we see price come up here and then come down. This could be the new top of the range. It doesn't come all the way back down to this range here. It makes a bottom here. So I'm not trading at the moment, we're just looking. And I'm going to move this bottom of the range up to here, where that candle is. And that ends up being a good place for the bottom of the range. And then here, I move this up to here, because that's now it could be the top of the range. And so when I see price come back down here, I want to go long, do a long scalp from the bottom. I don't want to do something in the middle. So let's say, for example, what I don't want to do is, this is short. I see price looks like it's going down and getting here because there's not enough profit. It's too close, and it could easily go back up the other way and take me out. So what I want to do is go long from the bottom of the range, short from the top. So when I see price come down to that same thing here, I want to see price pull reverse a little bit and start making it look like it's going back up. We don't know for sure it's going back up. I just want some evidence that it is. So right about there. So what I like about this is the stop loss is below the bottom of the range. And how big is this range? 246 up to 272 is about 25 points. So do I want to try to get 20 points? You could, but I'm scalping, so I don't think I will. I want to keep an eye on the price here and capture the profits when I can. When I see price coming down below the previous wicks of those candles, I'd be getting here. This is about 7.5 points a gain, which is not great, but it's not a loss. And we're just scalping here. We're trying to minimize our risk. So we don't get in, we're in the middle of the range here, we don't do anything here, we just wait for it to get back down to the bottom or up to the top. We're at the bottom, let's go short again, long again from here. Price makes a new high above these candle wicks here. This is where I want to get in. And if I would have hung on, you see I would have got stopped out right there. But what I do instead is I want to just look. Move that out of the way so it's easier to see. Price is going up. When I see it start to come down, in fact I even get a signal from Nebula here saying strong sell. That means get out here. Put that back. So that means I'd be getting out more like, the labels are in the way. It's a pain when your labels get in your way. So I'd be getting out right about here, which is not much profit, maybe 4 points of profit, but it's better than getting stopped out a moment later. And so now we're going to do it again. Price comes back down here. If I would have just went long as soon as it hits the bottom of the range, would I have got stopped out? In this case, no, that would have worked out. But I like to be a little safer and watch for prices start making a new high. This is a little high. We're kind of in the middle of the range here. So if I would have got in here, I'd be worried that we're, this top of the range, maybe it's not. Maybe it's more like here. So now, how much profit can I make from here to there? That's 6 points of profit, not very much. So I don't know if I'd be getting in there. In fact, it worked out really good. You got 20 points, so you just hung on to it. But I like the entry to be more like this, more lower. So let's say if I was watching, where would I get in? I would have got, where would I have gotten out? When I see price, weaken right here. So that's only a couple of points. It's hardly worth it. So instead you just watch, and then when price comes back up to the top of the range, which matches this high over here, and then you see price weaken and start to come back down, then I go short. Yeah, something like that. I like this. Stop loss is above the top of the range here. It's even slightly above, just a few pixels above that wick. And we could easily get 20 points there. Now, do we just open another one from here? No, I want it to go down a little lower, and it does. It goes down, matches the wick on this one. So now, I could just go long from here. If I would have went long from, without looking at the candles and the price action, if I would have just went long from here, would have got stopped out, just barely stopped out. So instead, I wait for evidence that price is moving back up, and it does right here. Moves above that wick, so I like to get in right there. So I avoided getting stopped out there, and price pulled back a bit, but it didn't stop me out. So then, where would I be getting out? Price is just waffling along here, along the EMA 21. I'd probably be getting out. Well, there's no clear weakness. Maybe here with a couple points of gain, but if you could have hung on, that's your 20 points there as it went up to the top of the range again. It's a little risky when it's going up and down because it could go either way, but we're getting near the end of the day. We're at the top of the range. We're going to go short from here. We see a little bit of weakness. Let's see right there what I've gotten. We only got 20 points. It only came back down to the middle of the range before coming up again. So I would have gotten out. I probably would have had a loss here when it went above that range, something like that, like 3.5, 3.75, 4 points of loss, something like that. Not a big loss, but we had many good gains before that, and then this just gets way too choppy at the end of the day. So the point of this video is this is takes a lot of concentration, and timing is important, and you got to watch the price action, the candles, etc. This is not easy. This is not for beginners. That's what I'm saying. Instead, like I showed you earlier on, if you could have got a good entry here and just hung on to it, all you got to do is sit back and watch and decide how much money you want to make. That's the way to go. That's it for the daily review for Thursday, July 17th.